Okay, good day everyone. Yes, it's afternoon. Yeah, so good day everyone. I hope you're fine and well. Okay, so today I want to actually make a simple video, alright, on how a newbie can actually take a trade, right? Let's just say take a trade that is actually going to be profitable. So number one, alright, this strategy is actually what they call the open high lows open high low close and open low high close trading model. All right, so open high low and close and open low high close trading model. Now in all these trading models, all right, what we need to be focusing on is open high low close. All right, that is for this. And for this one, it's actually going to be same open, high, low, then close. I'm sorry, open, low, high, close. So now we have seen that this is the model, this is the topic for today, the open, high, low, close model. All right. So now, like I said, instead of focusing on this open, high, low, close or open, low, high, close, it's actually going to be very deceiving, all right, like what most mentors out there are actually saying. All right, so the most important thing, all right, to actually understand about this trading model is actually focusing on the high and the low. All right, the open and the close is actually a minor stuff. All right, the open and the close is actually minor stuff. Just focus on the high and the low. All right, then for open high low close, all right, this is actually bearish. That means sellers are in control. All right, sellers actually, if I'm correct. Then for this, all right, it is actually buyers. Buyers, which so sorry, bullish actually. Buyers are in control. All right. Open high low close is sellers. All right. Open low high close is actually for buyers. Now another thing, like I said, what you need to focus on, the key things you need to focus on is the high and the low. All right. And on this, you need to focus on the low and the high. So this is all you need, all right, to actually like become a profitable trader. Now, for you to actually achieve this, all right, or make good use of this, all right, next thing you need to be doing is find what is your bias. All right, I might actually make a video later about bias. All right, so first thing is, what is your bias for the day? All right, so that is the number one question you need to be telling yourself. What is the bias? Are we bullish, all right, or bearish? So this will actually give us an advantage. All right, this will give us an advantage to either be seeking for buys and seeking for sales. Now we are using VIX volatility 25 index. All right, so we have to keep this one side. Now from a higher time frame, because of with a higher time frame, we can actually find our bias. Now looking at the trend, all right, let's use beginner aspect, which is number one. All right, trend line plotting actually. All right, you find out that you're actually bearish. All right, you can't actually come and start saying I know for some persons they'll come and be like, okay, price has broken, so we should be able to buy, possible or maybe not. All right. I'm not actually here to come and start telling you this is what I should be expecting in price. I'm just actually trying to teach you how you can actually cash each candles. All right. How you can trade each candles. I'm not actually trying to come and start telling you we are bullish or we are bearish. No. All right. So looking at this, all right, bias is a little bit bearish. All right. Now today, all right, today, I'm actually that what am I saying today? Okay, Saturday, all right, because of today is actually Tuesday, all right, today is Tuesday. Then during Saturday, all right, we can have some, you can see that what's happening on the this thing. We had a push up higher, then some rejection, rejection, rejection. We are not seeing a full bullish candle closure, all right. When I mean like full, like there's a difference between full body and then this with a long week, all right, something like this, all right. These are two different bullish this thing candles, all right, which you can see here. This one is a full body candle, all right. This one is a little bit like full body, but this one is actually full body candle with a rejection, all right. This one right here is a full body candle with a rejection, so it is not something that we can actually come and start saying, okay, okay. So now the next thing, all right, is for us to actually, since we're actually expecting sales, all right, we need to actually mark the this thing, the daily time frames, all right, candles, all right, for each day, all right. And now we've actually marked the candles. Like I said, if you're looking for sales, then we can now come and be like, okay, we are looking for sales towards this area, all right, towards this point, all right, this point. We have seen some signs that we should be bearish, all right, towards this point. So now, using time frame alignment, if you're on on a daily time frame, you need to jump over to the 1 hour time frame, not actually to the 4 hours, all right. So with that time frame alignment, we are jumping over to the 1 hour time frame. Now, with that 1 hour time frame, all right. Now we want to come and start looking at bias, all right. Now we are having this kind of bullish trend, which basic we actually have the higher high, higher low, higher high, all right, higher low and higher high, all right. And then later on, price stay changing. I want you to understand something, and then stay moving downward, all right. Now for you to actually catch this downward movement, how can you actually catch the downward movement? It's not all about the buying, all right. It's how you can actually catch the reversal or the continuation of the and price order flow. All right. So now you can come and start saying that during the buys we had this rejection, then all that kind of stuff. Now this time around, okay, we said before on a daily time frame. All right, mind you, we said that we are expecting sales because of what we are having rejections on those daily time frames. Those rejections were actually showing us that sellers want to be in control. All right, it's just like how am I going to put it? When you want to notice when bias is actually changing, all right, when you find out that okay, the price before is closing with full body candle closure, all right, they are all closing with full body candle closure, full body candle closure, and then the next candle that actually forms, all right, forms with a rejection, all right, like something like this with like a long wick, all right, sorry, with a long wick, then forms again, all right, with a long wick, instead of actually moving up higher, like closing with a full body candle closure, all right, it's just still forming with a this a long wick. Then that actually tells us that there's something wrong, all right. So right now, number one, we are actually on the 1 hour time frame. So we've seen this rejection, all right. That is number one insight, all right. This is a rejection which we have seen, and we have also seen a change in state of delivery, which means that most people call it market structure shift. All right, I call it change in state of delivery, CISD. All right, so price have actually dropped and it closed with a sell candle. This actually tells us that okay, we should be looking for sales. Now, for us to confirm our trade, we need to be looking for price coming to our fair value gap. All right. Actually, it is an IFVG, but I don't want to come and bulk you guys with a whole lot of stuff, but actually with a fair value gap, all right, which is called FVG. All right. So now, um when we are seeing all these criteria or all these things, all these our missing has already been met, just soup, change state of delivery, fair value gap being respected, then we can actually jump over to the 50-minute time frame. Before price can actually come over to this fair value gap, we need to jump over to the 50-minute time frame. And then when we do jump over to the 50-minute time frame, we have an advantage. What do you mean that we have an advantage? What I mean by we have an advantage is because of number one. Now we can say that this is the point, all right, price is coming into. So we can take it as point of interest, all right. So now we have this. Now the most important thing we need to be looking at is for us to, like I said before, all right, full body candle closure, all right, tells us that market, the buyers are actually in control if we are bullish for that time. But if you see a rejection, that is to tell us that sellers, all right, are about to come in, are about to set. Now you can come and start saying, we came into this fair value gap, we didn't close with a full body candle closure, we closed with a rejection. We all seeing this rejection at this fair value gap period, at this point, should tell us that we should be selling. Now the next thing we should come and do is we can sell off. But now the problem now is sell off to which point? Alright. Sell off to which point? Now you need to make sure that you are selling off to a point whereby let me just say you are okay or you are satisfied. So you can come and be like, okay, since I'm actually waiting for sales, I can actually keep here as my sell side liquidity, which is like your take profit point. All right, this point, all right, as your take profit. Then jump over to the 50-minute time frame. Then when you do jump over to the 50-minute time frame, then you can now actually take a short position. All right, now how am I going to do it? Take a short position. Your stop loss is not going to be at this point. All right, it has to come and be at that rejection high. All right, that rejection high should, that is where your stop loss should be. Your stop loss can't be wide. Some persons may actually tell you that you should keep your stop loss here and then hold the trade. No, sometimes it's actually like to just depending on your capital. Actually, I don't know, but for me, I do actually keep my this thing to this projection point. Because of why? Why? Because of I've seen this rejection. So I have a strong belief that yes, price is actually going to come down. And then I can actually hold this trade. This is 1 is to 15 risk to reward trade. A 1 is to 15 risk to reward trade. Alright. Now the next day, alright, we also had the same thing, which we are actually anticipating that price will still actually come down towards this point, which is on that this thing, 24 hours. If you can still remember this line on the daily time frame, you can see that we are expecting price to actually drop to this point. All right. So that is like our overall view. All right. If I'm actually going to put it that way. Now this is the next day. All right. Like I said, rejection. You can come and start saying price came up. All right. To give us this rejection. Start selling off. All right. And then you can still hold the trade towards this one, towards this point. All right. So that is it. Let me check if I can actually find another example on a daily time frame. So that is what you need to know. All right. So the next one is okay. Can I let me just say bring everything together? Okay. So we have this bullish candle. All right, and we also have this bullish candle. All right. So I think that is going to be all. This is actually for this one is open, low, high, close. This is for buys. We have done for sales. We want to do for buys. All right. So we jump over to the 1 hour time frame. Now jumping over to the 1 hour time frame using our data range, we can still see that it's actually 24 candles because of we on the 1 hour time frame. All right. If I'm actually accurate. Okay, 24. All right. 24 bars, which actually tells us that is 24 hours. All right. On 1 hour time frame. So now we can come and start saying that okay, we want to be expecting buys. Sorry. Now our focus can be like, okay, we are expecting buys to where? Alright. We can say we want to expect buy towards this point. Alright. or maybe this point right here. Let's take that as our buy side liquidity. Buy side liquidity. Just keep it like buy side. All right. We'll take it as our buy side. Then over to 15-minute time frame. Sorry. Please don't be angry. Actually, this is my first time for making a video. All right. So it's not my turn actually. All right. So yeah. So now we can come and start saying that. Let's just say on Sunday, Monday. All right. We can say okay. Let's look for an entry, all right, that will actually take us from here towards that buy side liquidity, which you have already backed out. Now, looking at this, all right, for some persons, they might not actually see an entry point, all right, but remember what I actually said, all right, the rejection is what matters, all right. So this is a rejection which I've actually seen around here, all right, or number one, we can see another change state of delivery. And what is that change in state of delivery, which is this one? All right. As far as you have seen a change in state of delivery, which have actually tell us that, which have actually showed us that the market bias has changed. All right, from bearish to bullish. All right. Now we have now found out that okay, we've gotten a confirmation, we've gotten this rejection, which actually didn't close with the full body candle closure. All right. Now we can now take trade. All right. Then you can now say you want to hold your trade. All right. Towards the buy side, keep your Excel at that point. All right. You excel at that point, and then think of a way to actually hold the trade towards that buy side liquidity. So this one is to 18 weeks to reward. All right, that is how you can actually take trade. Now for the next day, all right, for the next day, some of us can be like, okay, how can I actually take trade if I didn't take the trade on Sunday? How can I actually take the trade on Monday? Now to take the trade on Monday, all right, mind you, from 24 hours to the 1 hour, which is from the daily to the 1 hour, from the 1 hour to the from the 1 hour to the 15 minutes. Now, why is that? Because of number one, the 1 hour actually come and show us entering point. All right. What do you mean by entering point? Okay, let me show you something. Now we can see we saw an entry point on this we saw a fair value gap, all right, on this 1 hour time frame, which actually showed us that price might actually be coming towards that fair value gap. All right, as simple as that. Same thing here. All right, the next day we had this fair value gap, which price actually stink into the fair value gap. All right, came into that fair value gap, start selling off. As simple as that. All right. So yeah. Now the next thing, all right, we can actually come and start doing is this is the next day, which is actually on Monday. All right, we want to actually look for a trade we can actually take. Now we have this fair value gap around here. All right. Now we see this stuff, we saw this stuff, all right. Then we have seen a change in state of delivery around here. Now for some persons, they will come and be like, okay, price is still actually going to still drop because of the way this candle actually closed. But there was a rejection, yes, good. There was a rejection, yes. And yes, the candle didn't actually close with the full body candle closure. This is whereby patience actually comes in. So you need to actually be patient enough, all right. If price actually closed with the full body candle closure, all right, this has actually turned into a manipulation candle, all right, which is it has already rejected this fair value gap. Now we have seen this kind of stuff. We have seen another opportunity, which is a fair value gap again. Price have actually created a fair value gap again, rejected that fair value gap, which we can actually see. Now, when we have seen that kind of stuff, now we can actually take another trade, all right, and then hold it towards what? Towards that buy side, towards that buy side, all right, as simple as that, towards the buy side. Now, mind you, our stop loss is actually going to be at that swing low because of at that manipulation low because of price won't come back there again because it has already rejected that point. All right, that is why my Excel is at that point. Now you can come and start seeing it's always tight. That's how I actually take my trade, and then you hold it towards that buy side liquidity. And this is the buy side liquidity we are targeting, and this is 1 is to 35 risk to reward. All right, 1 is to 35 risk to reward. So with these few points of mind, you can actually try it and you find out that it's actually working. All right. So anybody that have a question, you can actually send me a DM or you can actually reach out to me. Thank you.